reporting back on the Northstar BCI Managed Fund for Q1 2024. What's the purpose of the fund? It's to deliver returns in line or better than the sector, but at significantly lower levels of risk. If you look at the 5-year performance of the fund, it's in line with the sector, just over 8% return, but at much lower levels of risk. Over the last 3 years, the fund has delivered 9% annualized return, and the sector just on 8%, yet the fund has done it at 20% less risk than the sector. Last year was a very good year for the fund, 2023, funded nicely against its sector, but the last quarter the returns are only 1.3% and slightly muted, and we'll get back to why that's the case. Just in terms of our own positioning, 69% of the fund is exposed to South African assets, 31% is exposed to offshore assets, of which 5% is in gold. If we look at the massive variation in performances between South Africa and global assets, particularly equities, over the last quarter and last year, it really gives an in-depth understanding of the difficulty one faces holding South African assets. MSCI South Africa delivered minus 3.4% in Q1 in Rands, and the world index in Rands did 12.9%. So huge outperformance of global assets. If we look back over a year, MSCI World did 34.2% in Rands, and the Cap Swix a mere 2.87%. In addition, just to give some explanation of the Rand returns, the ZAR fell by 7% in 2023 against the dollar, and that was quite unique because many currencies actually outperformed the dollar. And this year, another 3.5% down, which is actually in line with many currencies. So even the Swiss franc is down 6 to 7% this year as a result of a strong dollar. In terms of our own positioning, why? Well, quite simply, and I won't go into the details of it, but South African assets are priced for absolute gloom. In contrast, global assets are priced for absolute perfection. The opportunities in the fund, well, naturally, SA reprices as US interest rates drop at some point. And yes, there's a debate as to when rates drop, but at some point rates have to come off, even if it's in a year's time. And all emerging markets will reprice at that moment, as they have done traditionally. South Africa will be pulled along with that, and our assets are so cheap. And then just in terms of our own flexibility at Northstar and the opportunity that our infrastructure, our investment infrastructure offers us to capitalize on valuations and opportunities in the markets when they present themselves. What are our largest concerns? Well, firstly, a Fed misstep. But South Africa is already priced so poorly. And then naturally an unexpected negative outcome in the domestic elections in May, which we propose is a low probability outcome.